Hello, everyone watching on YouTube, listening on Spotify. It's another episode of NRG Insights. And for those of you who don't know, we speak to influential people in the financial services market, whether that be broking, lending, or ancillary products into the market. So today I've got Matthew. I knew I was going to cook up the name because we were talking about it before. Tell us where you're from. I think.
Well, I'll let you do that, Marcus, but in case you can't pronounce it,
I've got it meant to rock.
it's
Aquilae.
Aquilae Capital.
I got it. I said it before you said it. Aquilae Capital Advisory. Been in the market a long time. So, Matthew, you want to, first of all, welcome after I cocked out when I told you I would. But do you want to tell us, for those who don't know, you tell us a little bit about your financial services journey to where you got to where you are now?
Sure. So for those of you who didn't sit Latin at GCSEs, Aquilae actually means eagles. It represents a couple of things for me and my business partner, and it sort of bodes well for the business. But yeah, no, in regards to financial services, I've been in this business for a while now. I think approaching 28 years, something like that. So it's
Gravy.
yeah. I mean, look, it's the landscape's immeasurably changed since I started. I mean, I remember they were bringing in mortgage regulation in 2004, and I think that was shortly after the insurance regulation, or the other way around. And at the time, being a new starter in financial services, I didn't really understand the impact of those two sort of changes. However, as I grew through my career, so I started off at Lloyd's Corporate, worked my way through some of the corporate banks until the credit crunch happened. Realised actually I'm more of a real estate person as opposed to an IFA, because I'm a qualified IFA. I was doing structured products and portfolio planning and whatnot for the clients. But my real passion is real estate. Okay, I love property. I love commercial property, more so than residential, but in all forms. And that journey really properly started in 2011-12 when I moved into the city with people like Julian Engel, etc. And we ran a commercial desk. And at that point, the commercial market was very, very different to what it is today, Marcus. Today, you've got, everywhere you look, you've got someone doing bridging, someone doing development, someone doing commercial finance, etc. Back in those days, there weren't many challenger banks, there weren't that many bridges. There was a few legacy bridges, and there was a couple of large banks that have created funding lines that were being able to access the structured finance market. Now, of course, from 2011 to 2022, you could say, that whole market exploded. Okay, Suddenly we had lots of ways to do business because of the capitalization ratios that were applied on the big banks and stopped them doing business. So you had a lot of equity coming into the UK. You also had the lenders or the banks sat on piles of cash. So how can they get their money into the market? And so what happened was a whole array of lenders sprouted up from the greens. You had bridges, you had development funders, you had challenger banks, you had all sorts.
And just 140 of them now. How many do you think? There's 240, not including the family offices as well. Which is nuts. When did you? How many was there at the beginning? Let's say 2014. When you say there was a few, like how many products could you really pick from if someone gets
to be honest, there was not that many. Between 2011 and 2014, recovering from the crash, there was probably a handful. I mean, by that point, you had a few challenger banks that had already kicked in. But I would say no more. I mean, 2014 is a bit late, but a little bit earlier than that. You're talking 5, 10, maybe max, that would actually be able to deliver the deal. So during the course of that 10 years, the one thing that a lot of people overlooked was, of course, a low interest rate environment. All right. So you had credit teams, you had underwriters, you had lenders set up to do development, bridging, commercial finance, all without taking too much note of interest rate risk. Right? So our market was formed in effectively the lowest interest rate environment since the war. Okay? And so what that means is, as soon as the rate started to move, in 2022, 23, everyone started panicking. Everyone started realizing actually that's a risk that hasn't been part of the market for a while.
Yeah.
And
You know,
because
we said that in the beginning, actually. If you had not been in, even if you've been in the market 8 years, you've never really had to sell a product because it was cheap. It was cheap money. You don't have to think there was a lot of sales involved. So you're right. When it changed, it really changed the like, oh shit, I'm actually a salesperson. Or people that were salespeople or people that could understand the structuring of deals actually were elevated, right? Because there was a lot of people just order taking for a long time.
Exactly right. And also you could even say the banks were order taking because their credit profiles or the risk, their credit teams were looking at all the right risks, but they weren't factoring in interest rate risk because at that point it probably wasn't that prevalent. And you've got lenders up until the first rate movement that have been in business for the best part of 10 years that have never ever experienced the rate movement, right? So that's a huge oversight that the market probably didn't expect. And since then it's been bumpy. You've got economic worries, you've got, global issues that are going on in the world that are affecting our market, but they're much more, those issues now are directly affecting our market because of all the equity that came into the market over the last years from overseas, from Asia, America, etc. So it's all now linked in to what it is today, which is a great place to work. Financial services, in my opinion, is doing well. A lot of people are trading. You've always got questions of value. You've got questions of property worthiness, credit, delivery, and all those sorts of things. But they'll never go away. But the market itself, you've got the product, you've got lots of money, and you've got individuals willing to trade. So you've got the three principles there.
Yeah.
Where that goes is anyone's guess, I suppose.
So actually, we're talking about that as in where it goes. What's your opinion on that? I know we can't predict what's happening in the world at the moment, but what's your prediction over the next kind of couple of years? Do you think we're moving in the right direction still? Because I know it was a tough time for a period, but where do you feel like it's going?
I mean, on Friday, Marcus, I left the office, walking home to see the family and the kids, and I thought to myself, you know what? It's the first time I've actually felt the corner's been taken. It looks like, first of all, spring looks like it's sprung. Okay, people have got money, people want to trade. We're seeing lots of inquiries. I think it's going to potentially be a good year, and I let myself dream for a little bit. Then obviously on Sunday morning we woke up to the news that that we all know what's going on in the world, and the thing is that
the problems are a constant for us now, right? Like we haven't had a market where we've had consistently enjoyable market. Do you know what I mean? Like the inconsistency is the consistency now. That is never. We haven't had a period like you say. Every time you think, do you know what? I think we'll be all right for the next few months. I can't see. We're doing okay. There's always something that drops in. So I think we're so used to it.
Yeah, I mean, you're right. I mean, we haven't had a sort of a boom period for, I don't know, 15, 20 years, something like that. A consistent good period, and I get that. But I think
there's been money made. It's just that the actual consistency of like, oh, things are okay. I just have to concentrate on what I'm doing.
Yeah. The problem is you can't just concentrate on what you're doing, and everything has a compounding effect. Okay, so although, like you say, people are making money, people are doing business, it's a lot more difficult to create a business flow. All right, so a boom period just means more people want to do things, more people are saying yes, there are less risks involved. Credit teams are in the ascendancy. Sorry, sales teams are in the ascendancies. Credit says yes, we can get on with things. The way it is at the minute, I don't think looking back and expecting that to come back to our market is a positive thing. I think we've just got to deal with the road ahead. And the road ahead is bumpy, and it's going to be grey, it's going to be dark, it's going to be light, on occasion. And I guess you just got to find your space in that kind of environment, because as you say, we are seeing a lot of, it's a good day today, and then it's a bad day, and global politics has a huge effect on that, and there's no running away from it. However, saying that, controversially, I think it's an absolute, it's very sad at what's going on in the world. I'm not going to take it from no one at all, but from a purely economic perspective, it might not be disaster that people are thinking. There might be some green shoots out of what's happening, not on a humanitarian basis.
No, yeah. We need to keep him. This is a
But,
financial service podcast.
yeah, looking at this as an economist and sort of seeing, there was a lot of people moving away from the UK for many reasons. Yeah, that flow might come back now. Because the one thing the UK can guarantee, or to an extent, is security, right? Security and
it doesn't go out to enough people to jinx it. We are fairly secure, aren't we?
Well, more so than others in the world, and you can count our lucky stars for that. So, and you've got a market which operates within a set boundary and within set rules. And if you've got that framework and people are unhappy with it, fine, they can leave. But the alternatives aren't really showing up at the moment. In that regard, it might actually, I'd hate to say it, but it might be a good thing for us.
Yeah. Nice. So are you talking then about like finding your place in the market? How do people do it? Like, I think, is it come easy to you because you're passionate about real estate? Like you get it, it's enjoyable. What would you say to people who maybe haven't found their niche yet or haven't quite found their foothold in the industry? How did you do it, and what would you recommend to people?
I mean, it's a great industry, don't get me wrong. There's obviously fantastic people in it, and I know a lot of them, like a lot of them. There's a lot of good colleagues, and there's many ways to walk through the financial wilderness, if you like. I started off in corporate banking, then I was an IFA.
Yeah. Did the corporate side put you in good stead for where you are now with the boutique things? Did it really help?
Yeah, it did. It's almost similar to, let's say you do, I don't know, gymnastics for 5 years and then become a boxer or a footballer. It gives you a base where your body can adapt. And banking, like it or not like it, it gave me a sort of framework of compliance, basic rules, some discipline.
From then, the regulation side, once you come from, it's not like going the other way. If you come from that really regulated market, it's only going to benefit when you come into a slightly less regulated market where people haven't been used to the governance that you would have had in corporate, right?
Yeah, and it's only there to protect you as well. I mean, I walked into an office for the brokers a few years ago, and I walked into that office and I sort of tried to. These are unregulated structured finance advisors, right? So they don't work within a regulated framework. And I just said to them, look, there's got to be some sort of skeleton structure here, because if somebody says, look, can I check that file? What have you got on it? Have you got X? Have you got Y? Have you got Z? And that's what that corporate structure gives you. It gives you kind of a basic way of building the business, and it's enhanced Aquilae, immeasurably. It's allowed us to build a really good cockpit for a broker, which I hope you might be able to fill for us. And a great infrastructure. So, for example, for people wanting to join my business, we've got business for them, we've got leads for them, a very generous commission structure, and a lot of advice and support, because that's the other thing structured finance advisors don't necessarily always get. It can be a very lonely role. A bit of support, a bit of advice, a bit of direction, because I think, there's a lot of good people, talented people out there, but if you assume too much in our business, then you might pick up some bad habits. And if you haven't had that corporate banking background or any other worldly financial background, you might fall into some bad habits which are not very good.
It's interesting actually on the commercial side, because there's lots of people trying to get into it, like we talked about previously. How do you? And I know obviously working for a company like yours, when you can give you that kind of that governance, but it's still a frightening step for a lot of people as well to move into that market. And like you said, there's good talent out there. I think a lot of it is untouched at the moment because people kind of want the guy with the black book and the guy with the leads, etc. What advice can you give to those people that are looking to break into and maybe aren't quite where you need them to be, or most people need them to be, because they haven't got enough on the experience side? They've got the right character, got the right energy, but maybe just are lacking in that. What would you recommend for them to make their mark in the market?
Come and join my business. No, I mean, on a serious note, I would probably say to them, you don't need a financial background to be an exceptional structured finance advisor at all. You need to be tenacious, you need to use your ears, and you need to be able to ask questions, and you need to be able to show a little bit of empathy as well at times, because sometimes you don't need to know all the answers. Sometimes you need to work out the answers, and that's quite important. Because anyone can do a deal, right? It's not that difficult to do a deal, but to consistently do deals with commercial individuals that are quite demanding, especially on the bigger deals, and to manage those relationships, you need to be able to manage the psychological side of finance as well as doing the deals, and that will give you longevity as well.
Which is that's more important, the relationship management side, or are they equally as important?
Yeah. I think but if you're sat there thinking, I'd like to be a commercial finance broker, and you're worried about lead generation, and you're worried about relatively low risks to the role, then you're not worrying about the right things. What you should be more worried about is the economy, understanding how interest rates affect commercial yields, understanding what an operational business is, how to value a hotel off the back of trading figures, how to do a residual land loan calculation off the back of a valuation, or things like that is what you should be worried about. Leads are not a problem. There's lots of people that want to do business.
And I get this, but I see the other side of the market, right, where people do panic about leads, because it's frightening to go into something when you have to build your own. And I know you've been in a while, and also you've come from that banking background, and you're used to it. But for people that haven't ever generated leads, to not to worry about it is a tricky one, because they just
hang around with me for a few weeks, and I'll show you how to generate a lead. So, for example,
that's magic, isn't it? He was someone who can generate.
We interviewed somebody on Friday who's an excellent candidate, and hopefully, he's going to join. I've already got about £8 million worth of deals to give to him already. And I said to Jeremy, I said, look, do you think we can start sending him these deals? Because the reason we're hiring, we've got way too much business, and I like a certain level of service, and if we're not maintaining that level of service, the standards drop, and we don't like that. And at the moment, we've got some cracking £2, £3, £4 million deals that we can give to joiners, as long as they're able to start and understand what
I think that's it. I think it's the frightening thing of when they look at the deals that you're doing, and if they've never been in that position before, they're like, how on earth do I then continue that? They don't understand. I know you will teach it, but I think it's very difficult for people. And also you see the other side of the market that isn't like you, where people get dropped into the deep end and go, you're now a broker. So it's very different, right? That side of the market. And I think we're doing it the right way, but you can see from the other side. I speak to so many disillusioned people when they're dropped in and they haven't got a clue about lead gen, or they don't know all the technical bits, and they're just, because there's a massive difference between there are self-employed and self-employed, but there's a huge difference between what you do and what some people are doing, just dropping people into the market, right?
Yeah. I mean, look, the reason we took a few years to build an infrastructure for people to join is to make sure it's correct, okay? Because one thing, if you want people to perform, you've got to support them, and so on and so forth, right? So we took our time to do that. I guess it's experience, right? Like anything, if you start a job, you're not going to know anything or know anyone, and you get to know a couple of people, you get to know a few more people, they get to know you, and if you're the right character and if you know how to work with people, that should just create a flow. This morning, for example, I got a large lead for a very good portfolio from a lender. They need it off their books. They said, Matthew, can you look at this? Great, no problem. It's at 45% loan to value. I've pitched over the yield. The yield should be fine. Do I want to do that? Probably not, because I've got other stuff to do. But if I had a broker, it's a nice £8 million lead for you at 45%. There you go. And then if you're worried,
the lenders out.
Yeah, but I mean, it depends. I could give you a couple of smaller deals, but our minimum loan is about £2 million. So it's difficult to get below that. But we've got introducers that we can tap up and ask them to generate levels at that level.
What is the magic to that? So people, like I said, people starting out or aren't working with you, what's the magic to that beginning of lead generation? What do you think it is? Obviously, because you can't show somebody trading history right at the beginning.
Well, those. You pick up, start dialing. That's the. I'll tell you a story. So in 2011, I was a qualified IFA. I took a redundancy at Bar Cap, and I had 6 months paid. Okay.
Yep.
And at that point, I thought to myself, right, what do I do? Well, I've got 6 months off, so I might, go on holiday or whatever, but I'll chill out for a bit and work out what I want to do. And because I already had the qualifications, I'll go for another banking job. So I went for another banking job. This time it was at Cater Allen Private Bank at Santander. They offered me the job, 6-figure salary, happy days. So I banked that. Later on in the year, I've got a job to start. I'll take 6 months off and enjoy myself, right? Happy days. But as that date was coming closer, I thought, I know that road. I'm not sure if I want to go down the banking road. Yes, it's well paid. Yes, it's all that sort of stuff. But at the time, I didn't have kids. I didn't, I could dodge it. Yeah. So anyway, I thought, right, let me look at other things. So something else popped up on my desk, and it was more of an independent role, okay, for a small family office type business, for literally half of the salary, literally half of it. And I said to my friend at the time, I said, do you know what? I'm going to go for half the price, half the money. Yeah, it's more exciting. I don't know what that road looks like. It's much more exciting. That one's a bit boring. So anyway, I said to a recruitment consultant, my holiday's been delayed. Can you put the start date back a month? So I had an insurance policy, okay? Yeah. I took this family office role, okay? Started the role, walked into the office. The guy said to me, I'll never forget, he's a great guy, good friend of mine. Matthew, here's a phone. Here's a credit card. Here's a list of networking events. Over to you. Do what you like. Make as much money as you like or as little as you like. And for some reason, that just lit a fire in me.
Yeah. You've got to be that wired that way, haven't you? You know what I mean? Like, it's not for everyone, that.
It was perfect for me. Perfect for me. Yeah. And a month later, I told the recruitment consultant on the other job, sorry, I'm not taking it.
That poor the other guy, I've been there.
Yeah, she weren't happy at all because that would have been a big feat or whatever. But fast forward 17 years, I made the right decision. It was a self-employed role, half the cash, but now it's financially much better to make that.
It's really hard, especially when they're younger, like you say, if you could take risks. But it is. People do have to consider that. Like, it's not all sunshine and rainbows this side either. Like, not everyone succeeds. You do have to be wired to really want it, don't you? It's not self-employed being going out and eating what you hunt is a tough gig if you're not mega motivated, and you have to be self-aware of that as well, right?
Yeah, you have to be self-aware, and also remember though, there's a structure to everything, right? It's not like, oh, it's a big bad world and I can't get anything. The world is set up for business. Yeah, I could walk out of this office and say to you, I can go for lunch here, and here, and pick up 2 or 3 deals, no problem. Because there's networking events all over the place. People want to work. Brokers come to me for business that they can't place, and more, on mainly operational assets more than anything else.
Legal just don't get it. The trading type roles. Is that the brokers would come to you just because there's lots of brokers that watch this?
Yeah. So brokers not getting it is probably the wrong way of putting it. It's just
disparaging.
So it's my big thing is stay in your lane, right? We're good at operational businesses, development finance, and structured finance. Yeah. Can we do mortgages? Can we do residential portfolios? Yeah, we do that. But do we do them? No. I give them away to other brokers. Okay. Yeah. So for example, I gave a broker 2 years ago over 100K in commissions. Okay. I had a deal with him. We both made money. But I transacted the business? Probably. Did I want to? No. So the thing I'd say is, stay in your lane, stay good at what you're good at, and don't worry about the rest. Because if you create an ecosystem of people that trust you, so if I give that broker over there a £4 million portfolio, I know when he gets a hotel or a development deal that he might find a bit tricky, he'll send it to me, and we've got a reciprocal deal. He makes money, we make money, everyone's happy, the client's happy, and client retention, I've got no problem with that. The client can stay with whoever they want to stay with. So,
sorry, go on. I was just saying about that, how important it is to not be so insular and have that network. I think because some people are like, you get greedy with leads, don't you? Because you're giving something up and you're giving half of it away. But actually, you get so much more out of it if you just surround yourself with good people that do the things that you can't do, and accept that lead is not yours. It's about the customer journey, right? It's doing the right thing. Because 100% of zero is still zero.
It's also psychological, Marcus. You need to be able to have the ability to give the lead away,
Yeah.
right? You can't think, oh, well, I've given him something. What am I getting? You can do a deal. That's fine. But you've got to be in that mentality. Okay, I've got 5 deals today. I'll take that one. I'll give 4 to you, 2 to you, whatever. You crack on with it. Everyone's happy, right? It's a mentality thing. And I've never been like that. I've always been quite open. I've always, even in my previous roles, I talk about what I'm doing. And I think a broker that's more receptive to everyone rather than, closed off will always be happier, will be much more receptive.
Well, I think this is genuinely really beneficial for them as well, because you hear so much about, like, you're doing it, right? You're doing it. It's just genuinely being collaborative with other brokers and that kind of thing is something people don't talk about enough. But it's refreshing, and also those guys need to know as well. It's not insular. It's not about making as much money as you possibly can that second.
No.
Be really good.
No, look. So there's 2 points there. The Aquilae Capital philosophy is relationship. Okay, we go on about it in our marketing. We talk about it to clients. You don't make money on a deal, Marcus. You make money from relationships. Okay, why wouldn't I want 6 brokers that I do business with that I can hand off deals to and may or may not get deals back? Why didn't I want that? That's easy money. It's delegating. Here's a portfolio of resi properties. Can you do it? Should we do a deal? There's the handshake. Great. Free money. I don't need to do anything.
Half deal because you wanted to keep it. Because if we kept every single deal, it's not enough hours a day, right?
But then you're in the wrong business. Then you become, with all due respect, become more of a mortgage broker because you've got more capacity. Because, and I don't mean that disrespectfully, because I've done mortgage broking. But with mortgage broking, it's much more of a processional thing. With structured finance advising, you do a development loan, and that if it's let's say 25 million pound development loan, that's going to be on your desk for 6 months, 8 months, and if you don't know or understand every bit of it, you probably won't have a good relationship with the client afterwards. You might get paid a fee, but that's it. But on a deal such as that, we would want to consolidate the relationship with the client. Straight after completion, we'd want to then go on site with them. We'd sit down, work out what's right, what's wrong. We'd probably go on 1 or 2 of the site visits as well with the QS.
Yeah.
A lot of people, and this is for the younger guys, they miss the whole point. You get a client, you work hard, you get a lead. You work harder, you get a client, okay? You work even hard, get it through credit, get it to the finishing line, and you close it. But what a lot of people overlook is once you've closed it, you can then consolidate the relationship with the client. That's where we become friends, go to the pub, have for lunch, talk about other deals, making sure that the lender behaves themselves, making sure the client behaves themselves. And that is where I would say, differentiate ourselves from majority of the market, because we actually take more time, or try and take more time with the client post-completion than we do completion. Because at that point, you've got a reason to talk to the client. You've got a reason to smile with the client. And you've been through something together. And that's where you ask how...
connection there. We're connected. When you've done action and you've kind of bonded over it, that's the difference, isn't it? That's the
that is the difference. And that is where you get, oh, by the way, my friend wants to build a tower, or my mate wants to do this, or my mate wants to do that. And then suddenly you're working with 1, 2, 3, 4... 5 different people. And the other thing I would say to the younger generation is, I've got my best clients reading my worst leads.
Yeah.
Okay?
Yeah.
By that, I mean, every single lead, no matter how bad an introduction it is an introducer. Every person you speak to is an introducer. I try and teach this to the guys in the office. They're like, oh, I've got to go and see Mr. Smith about, £1 million deal here. And I said, don't worry about that. Mr. Smith will have friends down the pub, or his wife might have friends, or whatever. And that's where you get a lot of your business. I mean, one of my biggest clients came from, this was years ago. A broker came up to me and said, look, I'm having real problems placing this penthouse apartment. Okay. So I'm like, well, how have you got issues with this? Anyway, give me the client's details, I'll call him. So I called the client. I said, where are you? He said, zone 2. Great, I'll be over this afternoon, we can have a chat. So went straight to his office, book in hand. Remember, I'm going to talk about 2 penthouses initially.
Yeah.
I walk into this guy's office, and he's got figurines everywhere and statues, and without taking my pen out, I walk across the whole office with him, and I say to him, so what's all of this? He goes, oh, I'm a developer. I was like, okay, great. What are you developing? He goes, I'm doing 150 units here, 120 over there. And I'm like, okay, and who's funding this? And he said, oh, it's awful. It's, I'm dealing with one of the main banks, and they're capping me at 40%. So I was like, it's a bit like sweets from a kid. I'm like, hang on a minute. Without taking I'll never forget, I never even took my pad out of this meeting. I said, well, forget the penthouses for a moment. How much do you need here? And he was like 22 million, something like that. When do you need this? 2 months? And you're at 40%. Yeah, would you 60, 70? Oh, I didn't know that people like that existed.
No, as well, in that world, because you're in finance, we all know the high leverage, but even as a developer, people just don't know what they can get.
They really no. So anyway, I ran back to the city because it's when I was working in the city. And 6 weeks later, I banked a £21 million loan. And that client, we then did a 29.5 million with him on another one. And I'm actually seeing him today at 1:30 this afternoon.
Oh, nice.
So yeah, but the point is, that's where you get your business from. There's no structured finance. There's no sort of process to follow to get business. It can come from anywhere. You could be on the bus, sat next to somebody, and hear them say, "Oh, the GDV got downvalued." Oh, great. Well, here's a business card. Let's talk about it on Monday.
Yeah, amazing. That's really. I was going to finish it off and say give one last piece of advice, but I think that's really poignant because.
Is that okay? Yeah. Is that helpful?
I think that's genuinely the advice that people need to know. It's not about that transaction. It's about that relationship. And I think we've just created the title for the podcast as well because it's so true. So that's a great way to finish.
I'll come on again, Marcus, as well. This is a quick one, but I'll come on again properly. We've got a bit more time or whatever. But I'd like to share more with the younger generation.
I'm talk to you and genuinely, I'm not just bullshitting. I could talk to you for hours because you're clearly passionate about it. And you're good at what you do, and I think people will genuinely get a lot out of it. If people want to speak to you, Matthew, obviously they can speak to me. But if people want to speak to you, whether it be about the brokerage or just generally want to get in contact with you, all more socials will be on our socials. But what's the best way to get hold of you?
Phone me, email me, or contact me.
Leave your phone number on there because there's lots of weirdos on Spotify. But thank you very much. Like I said, I was going to keep you for 20 minutes. We were talking for 35 already, but genuinely appreciate your time today. And it would be great to get you back on as well. I think we barely scratched the surface, but thank you everyone watching and listening on YouTube and Spotify. Thanks, Matt. I really, really enjoyed your time today. Appreciate it.
Thanks, Marcus. I'll see you again. All right. Cheers.
Matthew.
Thank you. Bye.